Okay, if we continue on to question 2. Question 2 specifically asked about, let's just scroll to the end. They said open and post and balance the debtors control account in the general ledger. So they first wanted you to do the debtors control account to work out what is the total debtors for all debtors in your business, okay? And then question 2.2, they wanted you to do the individual account, but only for Al Simmons. So you need to show each individual transaction. So take his opening balance, show each and every individual transaction for that month for that debtor. And then the last one is they wanted you to do a debtors list. And that debtors list balance should agree to what was on question 2.1. Okay. Now let's quickly see what information they've given you. So in the information they've given you, they told you they've given you information was taken from the books of Tal Talk. They've given you the list of debtors balances in the debtors ledger. So this is your debtors balances for the month of, for the 31st of January 2021. Okay, that is for the previous month. So these are your opening balances. So let's just write here opening balances. Then the next thing is they've given you your debtors journal for February. Now the information I'm going to take out here for question 2.1, I'm going to use this debtors control column. Then for question 2.2 and 2.3, I'm going to use the individual line items. Okay. And you will do the same for all the other journals that they've provided to you. Now remember, when we capture something in your general ledger account, we only capture a total. We do not capture the individual amounts. And that is where a lot of students went wrong. They captured each and every individual transaction as opposed to the totals. Okay, and then we do the same for your debtors allowance journal. We would only capture the total. You've got your cash book receipts. Now for the cash book receipts, very important, we only capture what is in the debtors control column, not the bank column. The bank column includes receipts from other sources as well, which is not necessarily our debtors. So if you recorded that, that would have been incorrect. And then for February, we've got our general journal. So here we generally look for anything that is debtors control and we record it. Now in the general journal, they already tell you whether it's a debit or credit. So these are credit accounts. So we would then account for those as well. You can account for them either in your debtors control account or we're going to account for them when we do the individual transactions. Now for this last journal, they tell you it's interest for the month on the overdue account at 10% calculated on the month-end balance. So the 10% is on your month-end balance, so we have to work out what is the balance before we can calculate that 10%. Now let's quickly look at the additional information. They told you a check was received from Alf Simmons on the 26th of February. In settlement of the account, it was returned as an RD check and the transaction has not been recorded. So has yet to be recorded. So we have recorded the check received is in the cash book receipt, but this RD check needs to be accounted for in our general journal. And then the debtors control and debtors list was reconciled at the end of January, which means that it balanced. So you can take the total year at, the total year would be your opening balance, would also be your opening balance for your general ledger account. Okay, so because they've already balanced that, you know that the balances do agree. I'm just going to share the slides again to show you what the answers would have looked like. So what you should have discussed. Okay, so for question 2.1, you would have started with the opening balance of 54,300. Okay, so that amount was given to you. Then the 1,314 and the 315, that came out of your general ledger. That was physically transferred out of there. Then our sales return amount came from your debtors allowance journal, was the total for that column. Your cash book receipts is the total debtors control from your cash book receipts. Sales and VAT, that was your debtors control in your debtors journal. Now, how do you know what this is? If you look at the columns they've given you. If there's a VAT account, then it's always sales and VAT. If there's no VAT column, then it would not be VAT. Then your credit losses, this was also from your general journal. You would have transferred it there. And then this is the 315, the reversal of that one, which was based on the RD check that you had to include additionally, as well as the RD check. So these two transactions you would have to have recorded additionally because they would not have been included. And then the interest received, this calculation you would have to have performed. So this was their opening balances, their additional purchases, and their returns, and then you work out the 10%, and it is for a 12-month, divided by 12 months to work out the interest for that specific amount. And then you had to balance it and carry over the balance. Now, a lot of you did not balance these accounts, and then you lost 2 marks for that. Or when you did this calculation, you forgot about the returns, or you did not divide it by 12. So you forgot that the interest is only for a portion of the year. And then for the bank, the most common error was you used the total amount received from bank as opposed to just the debtors control portion. For question 2.2, what a lot of students did incorrectly is they swapped the debits and the credits around. We were looking at debtors, and a lot of you treat it as creditors. Another thing is students did not put it in date format. So that means your balances here at the end was incorrect for most of the transactions. Most students did not include folio number. So the folio number is what journal was the information captured under. And you lost marks if you did not include that. Okay, so for L. Simmons, what you had to do is if you go look at all the journals, you would have taken the individual transactions specifically for that data, and if it is a sale or something that was sold to them, you would increase their balance. If it is something they returned, you would decrease it. If it's a payment they made, you would decrease it, and you would account for it. Now, a lot of you stopped at 26 and you did not record the transaction on the 28th, where you then lost the marks. But then based on what you had here, I would have given you the method mark for question 2.3. So whatever your balance was, if you included that in the next question, you would have received the mark. Then for question 2.3, you had to go do the debtors listing. So what you had to do is you started with the opening balances that they've given to you, okay? And then you would have added all the sales that were made to them, as well as any returns, and for Marvel, the interest that you have calculated, you would add to their account. And then you would work out the new balances. Now that 47,574 should agree, let me just go back to the first slide, should have agreed to what you worked out in question 2.1. Then you know you have recorded everything in both the debtors control general ledger account as well as your debtors listing. Okay, so a lot of you forgot to put the total at the end. and then you lost that mark. We had a look at what you did here. So if you did calculations here on the side and you had an incorrect amount here, I would have allocated the marks here. So most students got this one incorrect because they worked out the interest incorrectly, but they could apply the rest of the information to get to the answer. And then, okay, so that is question 2. Okay, are you guys okay with question 2? Do you have any questions?